Good morning. Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial. Here's where we discuss certain topics. We answer questions live on the air. They can be surrounding any aspect of our solo 401k plans and even IRAs. Today's topic is, what is the guideline for a self-directed 401k? So we try to help you save taxes by explaining the solo 401k rules and IRA regulations, which are tax shelter retirement plans, allowing you to save on taxes by making pre-tax contributions now and also save on taxes in the future by making Roth contributions, as those funds will grow tax-free. That way you can build some real retirement wealth. So this is your chance to get answers. Use the chat to ask your questions. Type them over now. I see someone's typed in a couple questions here. Go ahead and type them over, and then as they come in, we'll pause and answer those questions. So let's get started here. So the first question here is, could my solo 401k reimburse me for business-related travel miles? Example, visual inspect rental properties owned by 401k, trips to close behind properties, inspect potential properties for the solo 401k. The answer is an emphatic no. That is definitely not allowed. Keep in mind that's your solo 401k that's making the investments. You are the trustee of the plan. You cannot get compensated, nor can you receive any type of reimbursement, neither can your business. The connection of your business with the solo 401k is that you're able to open a solo 401k plan because you're self-employed. So those type of services you're talking about there, those are business type expenses. A solo 401k is not a business. So as a result, no, you cannot use any solo 401k funds to cover such activities. Now, as the trustee of the plan, you are required to look after the assets of the plan, including making sure you invest those funds in allowed investments, that you're not engaging in prohibited transactions. So such items you're mentioning there, those are not considered expenses to the solo 401k plan. An expense to the solo 401k plan related to the property would be if a property tax bill is due. Those would be paid with funds from the solo 401k. What is more, let's say that the rental property that's owned by the solo 401k plan requires a new roof. Number one, you cannot perform that activity. You're not allowed to perform sweat equity. Number two, you would need to hire a third party, such as a contractor who's not related to you. Therefore, you could not hire your spouse, your children, your parents, for instance. And number three, those expenses would be paid with solo 401k funds. So good question. Okay. Before we get to this question here, let's get started with our presentation, and then we'll come back and answer the next question. As always, again, type your questions over so we have them on the queue, and then we'll get to them. So today's topic is, what is the guideline for a self-directed solo 401k plan? So obviously, before you can even open a solo 401k, aka self-directed 401k, you need to make sure that you're eligible. So when people ask, what is the guideline for a self-directed 401k, the most important thing to understand is this. There's no single guideline. So a self-directed 401k is governed by multiple IRS regulations, eligibility requirements, investment guidelines, and compliance obligations that all work in concert or together. So from an eligibility perspective, meaning who can have a self-directed 401k, aka solo 401k? Well, a self-directed 401k is only available to self-employed individuals who meet very specific requirements, such as not hiring any full-time W-2 employees in your business other than obviously business owners. Your spouse can also work in the business, but you cannot hire anyone who's a W-2 employee who's not a spouse or an owner. If that individual works 1,000 hours or more as a W-2 employee, also known as a common law employee, then you would not qualify to open a solo 401k plan. So in short, if your business employs a common law employee, meaning a W-2 employee who's not an owner in the business, and he or she works 1,000 hours or more per year, then you would not qualify to open a solo 401k plan. Of course, just like everything else in the IRS code, there are some exceptions, such as independent contractors. They can always be excluded regardless of how many hours they work. So if your business employs any independent contractors, that's okay. You're still going to be eligible to open a solo 401k plan. You can always exclude those who are under age 21, whether they are W-2 employees or not. So that's another exception. So if you meet these requirements, you are eligible to open a solo 401k plan and effectively self-directed. And lastly, make sure you don't own any other businesses that employ any full-time W-2 employees, because you have to apply these rules across all businesses that you own. So what does self-directed mean? I'm sure you heard those words all the time, especially when you hear self-directed IRA, self-directed 401k. So the term self-directed 401k is often misunderstood. So you really need to understand what true self-direction really means. It means that you are the trustee of the plan, which means that you are the only one that has signing authority and access to the solo 401k funds. No one else has access to those funds unless you name a co-trustee. You also have checkbook control, otherwise known as wire control, meaning that let's say you want to make an alternative investment like invest in a rental property. You can actually have those funds wired directly from the self-directed 401k holding account, aka a bank or brokerage account, directly to the title company or the escrow company for the purchase of that property. And only you can direct those funds. And again, you get to choose where to hold your funds at. They can be held at your local bank, credit union, brokerage firm. For example, many of our clients will use Fidelity Investments and Charles Schwab to hold the self-directed 401k funds for the plan offered by my solo 401k Financial. Because here at my solo 401k Financial, we don't hold our clients' funds. That's the great thing about it, and that's why we get a lot of business, because the clients get to choose where to hold their funds at. Many other providers out there will try to steer you to a bank that they may be getting kickbacks from, or a brokerage firm you've never heard of, or a new brokerage firm. Whereas here at my solo 401k Financial, you get to choose. And if you decide to use Fidelity Investments or Charles Schwab, you can actually invest in real estate through those brokerage accounts, because those institutions are providing the brokerage accounts for the self-directed 401k offered by my solo 401k Financial. So it's the solo 401k offered by my solo 401k Financial that allows for investing in alternative investments, whether real estate, promissory notes, private equity, and so forth. And therefore, you can hold your funds at Schwab or Fidelity, and they're just serving as the custodian of the cash. So that's important to understand. And as a result, you can invest without waiting for a self-directed trust company to approve it, to send the funds out. So with a properly structured self-directed 401k, aka checkbook solo 401k, you can invest in any asset that is not prohibited under the IRS regulations, including real estate, whether residential, commercial, also cryptocurrency, promissory notes, whether trust deeds secured by real estate or a non-secured promissory note, tax liens, precious metals, private equity, and so forth. So the list goes on. Let's take a look at a question here. and then we'll pick back up where we left off. So I want to open a solo 401k to buy rental properties. I plan on doing DSCR loans, and I know they don't work with trusts. I'm not sure what a DSCR loan is, so you're going to have to clarify that. I saw under my solo 401k registration form that I need to pick a trust name. Would this prevent me from getting a DSCR loan? So please explain. I don't know if you're referring to a non-recourse loan, where the solo 401k plan obtains a loan to invest in real estate. That's known as a non-recourse loan. And yes, the plan offered by my solo 401k financial allows for investing in real estate. And the regulations do allow for a non-recourse loan to a solo 401k, aka self-directed 401k, for investing in real estate. It has to be a non-recourse loan. And we've actually performed webinars on that topic. So if you subscribe to our YouTube channel, you can access over 1,100 videos that we've done on various topics surrounding retirement accounts, including solo 401k plans and IRAs, including whether or not you can utilize a non-recourse loan, which again, the answer is yes, but more importantly, what those regulations are. Also, please like us across the social platforms. By subscribing to our YouTube channel, you're going to receive notifications regarding when we go live so that you can be informed of all the important topics that we covered. It also helps to spread the word to other solopreneurs if you like us on the different social platforms. Okay, but yes, the solo 401k does allow for investing in real estate. With regards to naming your solo 401k plan, the typical terminology used to name a solo 401k is a 3-word name. Typically, you use your business name followed by the word trust. You can also use a fictitious name. Just make sure you include the word trust. Don't include the words living, family, investment, real estate, and so forth, because those are also trusts. But a solo 401k is a retirement trust. Just like an IRA is actually a retirement trust, all 401ks and all IRAs are considered retirement trusts, which means essentially that they're favored, that they are offered favorable or afforded favorable tax treatment under the IRS code. Oh, here we go. Here's the terminology you're saying. Debt to service coverage ratio. Yeah, I don't know what that terminology means, but I've never heard of that terminology in the context of a solo 401k investing in real estate, and I've been in the industry for about 30 years. So I don't think that applies to IRAs or solo 401k plans. If you're making an investment in real estate, the solo 401k plan will receive a non-recourse loan for investing in that property. Okay, let's keep going here. Oh, okay, so you are saying non-recourse. Okay, that must be some special terminology or fancy terminology to refer to a non-recourse loan. So let me send you a link from our website that talks about the non-recourse loan regulations. And we also have a list of lenders that will loan funds to a solo 401k plan for investing in real estate. Give me a moment here. So here's the first link here, which has a list of lenders. So take a look at that link. And then here's a link to a page on our website that talks about the non-recourse loan regulations. There's a video there, actually. There's a good infographic. There's a procedure there. So take a look at that. Okay, so let's keep going here. Thank you for all the great questions here. Okay, so let's go back to our presentation here. So again, go ahead and keep typing over your great questions, and we'll pause and answer those questions as they come in. They can be regarding any aspect of solo 401k plans and IRAs, as I mentioned earlier. Today's topic is, what is the guideline for a self-directed 401k? We've been unpacking that at great length. So we already talked about allowed solo 401k investments. Now, beware of custodian-directed 401k plans. So what does that mean? Well, some providers use the term self-directed even though a custodian or trust company holds the funds. So there are self-directed 401k trust companies out there. However, it's not a truly self-directed 401k because you must submit paperwork for every investment and every expense that needs to be paid for that investment owned by the 401k. As a result, you are charged transaction fees, holding fees, which obviously you do not want because those are not necessary when you're the trustee of the plan. You do need to make sure that you pay annual fees for having a self-directed 401k plan provider. That's a different. In order to continue with the solo 401k, aka self-directed 401k, you are required to adopt what's known as an IRS solo 401k plan document. And that can only be adopted by utilizing a custodian or a solo 401k plan provider or a trust company. But you can limit what the trust company or custodian can charge you with regards to asset fees, transaction fees, holding fees by having a self-directed solo 401k from a company like my solo 401k financial. So whenever you open up a self-directed 401k with a trust company, that structure is not true checkbook control, and it's often more expensive over time than if you actually open a truly self-directed 401k, aka checkbook control solo 401k, with a provider like my solo 401k financial. So a checkbook controlled solo 401k puts you in full control, allowing for faster processing of investment and significantly lower annual fees. Yes, I already answered that question. The answer is no, that's not allowed. And we're going to post this webinar on our YouTube channel so you can refer to it later. And I gave a very good detailed answer as to why, but the answer is no, that's not allowed. Okay, let's keep going here. So whenever you're investing a self-directed 401k, especially in alternative investments, you need to be aware of the prohibited transaction regulations. So this is one of the most critical guidelines of a self-directed 401k, and that is avoiding prohibited transactions. And again, this is especially the case when you invest in real estate. So you must follow certain regulations with the self-directed 401k. So one, you cannot personally benefit from the investment. You would be personally benefiting from that self-directed 401k investment in the context of real estate, for example, if you use the self-directed 401k owned rental property for personal use. You can't even use it as a vacation home. That's prohibited. So other disqualified parties besides yourself would be your spouse, your children, your parents. So none of those individuals can use the property for personal use. So again, the golden rule when it comes to invest in a self-directed 401k, aka solo 401k, is that all investments must be made solely to benefit the self-directed 401k, not you personally. Obviously, you benefit personally indirectly because it's your 401k, but in the eyes of the IRS regulations, a self-directed 401k, aka solo 401k, it's its own separate entity. It's a retirement trust. And you're the trustee of the plan and the participant, but that doesn't mean that you can use the funds for personal use, nor can you use the investments for personal use. Okay, let's keep going here. Let's see if we have any other questions here. Here's a question. So how does one handle maintenance for rentals? Seem like this could be a problem long term. No, it's not a problem. We're talking about not using solo 401k funds to pay for expenses that are related to you as the trustee for managing the assets of the plan. That's not allowed. You are allowed to obviously perform your trustee duties for the solo 401k plan. Trustee duties entail making sure that you're investing the self-directed 401k in allowed investments in the context of a rental property, making sure that the solo 401k, aka self-directed 401k, pays fair market value for that property. That may entail you going to look at the property, which is fine because the property is not owned by the plan and you're not living in the property. You're just searching for a property for the self-directed 401k to invest in. But that doesn't mean that you're able to have your solo 401k reimburse you because you have to drive or take a plane flight to another state to look at a rental property. That, again, you're not allowed to use 401k funds for that. So that doesn't mean that you're not allowed to actually perform those type of trustee functions. Those are not considered sweat equity work. Now, if you were to actually fix the property, let's say you need to put a new coat of paint on that property or fix a leaky toilet, you cannot perform those functions because that's not a managerial function. That's sweat equity. So one, it would be prohibited for you to do that. Second, it has to be done by someone who's not a disqualified party, like a contractor who's not related to you. Third, you need to pay those expenses with funds from the solo 401k. So expenses that are paid by the solo 401k in the context of a rental property are property taxes, contractor expenses, not expenses that you accrue or your business accrues because you went to review a property that's in another state, as I mentioned, or near you for the solo 401k to invest in. So there's a big difference, a big distinction. Okay, let's see here. See if we have any more questions. Looks like we have a question here. We'll take a look at this question here after we continue to go over some more slides here. In the meantime, go ahead and keep typing over your great questions. So let's talk about required plan features for a self-directed 401k. Again, today's topic is what is the guideline for self-directed 401k? So not all self-directed 401k plans support all IRS allowed features. So you want to make sure that you open a self-directed 401k, aka solo 401k plan that's properly designed. And here at my solo 401k financial, we actually draft self-directed 401k plans for the maximum flexibility under the IRS code, which means the plan allows for alternative investments. It allows you to serve as trustee of the plan. That's typically what checkbook control means. It means that you are the trustee of the plan and you can write checks from the solo 401k to pay expenses associated with the plan. Let's say you invest in a rental property. You need to pay a property tax bill owned by that, for a property owned by the plan. You can write a check from that solo 401k bank or brokerage account for the payment of that property tax and other expenses. A properly designed solo 401k plan allows for voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. And also, we were the first in the industry to not only allow for the mega backdoor Roth solo 401k starting back in 2013, but we also were the first in the industry to provide a solo 401k plan that allows for the auto contribution tax credit of $1,500. So make sure you open up a self-directed 401k with a provider like my solo 401k financial who has a plan that has the auto contribution feature built into the plan. We've noticed that more self-directed 401k providers are allowing for the auto contribution credit, which is great. But traditional solo 401k providers like the Fidelities of the world, Charles Schwab's of the world, the Invesco's of the world, Ascensus, Chase, Wells Fargo, T. Rowe Price. They don't offer a solo 401k, aka self-directed 401k, that has the auto contribution credit built into it. And the $1,500 auto contribution credit is essentially a way for the government to subsidize the self-employed business to open a solo 401k plan, as it covers the cost of basically maintaining a solo 401k plan for many years to come. It's a total of $1,500. You spread that auto contribution credit in $500 increments over a 3-year period. So, and you file Form 8881 each year to claim that $500 credit. So if you open a self-directed solo 401k, aka self-directed 401k here in 2026, this would be the first year that you would qualify for that $500 auto contribution credit. You would also qualify for a second $500 amount in 2027 and a third $500 amount in 2028 for a total of $1,500. So you file Form 8881 a total of 3 times each year for $500. We do have a PowerPoint walkthrough and video walkthrough that we provide to our clients regarding how to fill out that Form 8881. So essentially, a self-directed 401k offer with my solo 401k financial is designed to include all available IRS approved features, not just the basics. So let's take a look at some questions here and then we'll continue. So we have a question here from, let's see here. Here we go. Pardon me, I've been fighting a really bad cold here for the past couple of weeks. It's that time of the year. So, it appears that after making voluntary after-tax contributions, 401k contributions, we have the option of converting these after-tax funds either to a Roth 401k or a Roth IRA. That's exactly right. That's something that's allowed under the IRS regulations. That's part of the mega backdoor Roth strategy. As Fidelity does not provide an online over-the-phone option to roll over voluntary after-tax funds to the Roth IRA, and instead requires paperwork to be completed for this transfer, would you recommend first converting the voluntary after-tax 401k funds to the Roth 401k, and then request a rollover from the Roth 401k to the Roth IRA? So, when you convert the voluntary after-tax solo 401k funds to the Roth IRA directly, that's correct. You need to fill out Fidelity's conversion form request. And let me share that with you here. We actually have it right there on our website too. Here's the link. But with respect to your question, you typically want to convert those voluntary after-tax solo 401k funds directly to the Roth IRA if that's where you ultimately want to deposit them into. Why? Because generally when you convert voluntary after-tax solo 401k funds to the Roth solo 401k, you cannot transfer those Roth solo 401k funds out of the plan even to a Roth IRA until you're either age 59 and a half or no longer self-employed, because you have to meet a triggering event, because that would be considered a transfer, not a conversion. And then second, based on your question here, you're still going to require Fidelity's form, whether you convert it directly from the voluntary after-tax solo 401k to the Roth IRA, or whether you first convert the voluntary after-tax solo 401k funds to the Roth solo 401k and then process a transfer from the Roth solo 401k to the Roth IRA. You're still going to have to fill out a Fidelity form. So you're going to get to the same place either way. So good question. It looks like follow-up comment to your question here, as this could potentially avoid any gains that may accrue if we were to wait for Fidelity to process the paperwork, if the intention was to transfer voluntary after-tax contributions to a Roth IRA. So keep in mind that the funds in the voluntary after-tax 401k are going to be in a money market, so it's going to have very small gains. So just those small gains, when converted to the Roth IRA or the Roth 401k, will be taxable. Obviously, the basis, the contribution will not. Okay, let's keep going here. Excuse me. Again, we're finding a really bad cold here. Here's a follow-up question from Phil. From my previous question, could the mileage be deducted in my personal tax since these are not personal miles? No, they cannot. Because again, the property is going to be purchased by the solo 401k plan. So you cannot get any type, you cannot benefit personally from an investment that's going to be made by the 401k. So no, that's not allowed either. Let's keep going here. We'll take a look at Richard's questions here in a moment. In the meantime, let's continue with today's topic, which is, what is the guideline for self-directed 401k? Again, go ahead and type your questions and we'll pause and answer those questions as they come in. But we want to make sure we get through today's great topic as well. And if this information is helping you feel more comfortable about your solo 401k and IRA feature, please take a moment to subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. And we go live at least every day, once a day, many times twice a day. So IRS reporting requirements, that's always important when talking about the self-directed 401k guidelines. So self-directed does not mean unreported. Compliance is a key guideline, as you've been finding out here. So common required filings are Form 1099-R. A Form 1099-R is required for distributions, Roth conversions, whether you're converting pre-tax solo 401k funds or voluntary after-tax solo 401k funds as part of the mega backdoor Roth solo 401k conversion. Also Form 5500 Easy, which is an informational return and is required once the total market value, including all assets in the plan, so real estate included, once the market value of all the funds and assets in that plan are greater than $250,000 as of the year end, then a Form 5500 Easy is required. So for example, if your plan year ended December 31st of 2025, and if the market value of all your investments, whether it's cryptocurrency, equities, real estate, cash, all combined and all participants' funds, so both spouses that are participating in the same plan, you have to add all those funds together. And if the value was over $250,000 as of December 31st of 2025, then the Form 5500 Easy is due by July 31st of this year to the IRS. Here at my solo 401k financial, we prepare all these required returns upon your timely request. Keep in mind, we don't have access to your funds, so you need to make sure you communicate to us when you need these returns filed, and we'll prepare them for you, and they'll be covered in our annual fee as long as you timely request these documents. You can visit the Forms tab of our website. If you go to the top right-hand corner of our website, there's a Forms tab, and click on that, and you're going to find out more information regarding how to request Form 1099-R and Form 5500 Easy Preparation Assistance. There are online forms there that you would fill out to notify us. So that's very important to understand, compliance requirements. So here's a question here. I have already contributed my maximum employee 401k contribution for 2025 and my employer profit sharing. Can I still make voluntary after-tax contributions, mega backdoor Roth, for 2025 if I open a plan now? So to my employee, So are you saying that, I'm a little confused when you're saying you want to open a solo 401k if you've already made contributions. So it sounds like you already have a solo 401k plan. So, and regardless, even if you do not have a solo 401k plan, it's not too late to open a solo 401k plan in the current year so that you can make contributions, certain types of contributions for the prior year. And you would have to open that solo 401k plan in the current year by your business tax return due date plus timely filed extension. So for example, let's say you want to open a solo 401k plan here in 2026. You can open the solo 401k plan depending on how your self-employed business is taxed. Let's say it's an S corporation. So it's an S corporation self-employed business. As a matter of fact, let me see if I can get to those slides so I can give you an illustration here. Give me a moment here. So here's the illustration for an S corporation self-employed business as far as the deadline. So if you open a solo 401k plan here in 2026 for the first time, then you have until March 15 of 2026 to open the solo 401k plan here in 2026 so that you can make voluntary after-tax solo 401k contributions for tax year 2025. So it's not too late. And if you file for a business tax return extension, you can wait until September 15 of 2026 to open and fund that solo 401k plan for tax year 2025 voluntary after-tax solo 401k contributions. So it's definitely not late. Now, so if you have an existing solo 401k plan, then yes, that means that solo 401k plan would get restated over to a solo 401k plan for my solo 401k financial, and you actually, that means you already have a solo 401k, so we're restating that plan to our plan that allows for the mega backdoor Roth. Therefore, same thing, you have until your business tax return due date plus timely filed extension here in 2026 to make tax year 2025 voluntary after-tax solo 401k contributions as part of that mega backdoor Roth solo 401k strategy. So that's great. Oh, here we go. If I started opening the underlying brokerage account with E-Trade, however, given how terrible E-Trade account's opening process is, any issues with switching the underlying brokerage to Schwab with your plan? Note that E-Trade account opening application has not completed, but it's underway. Yes, you can, and you're exactly right. Working with E-Trade is a nightmare. And I always forewarn clients when we perform these daily webinars that when the question comes up that stay away from E-Trade if you can. Because E-Trade, I don't know what happened with E-Trade, but ever since they merged with Merrill Lynch, it's taken them 6 to 12 months just to open up brokerage accounts for a self-directed solo 401k plan. So yes, stay away from E-Trade. But yes, with my solo 401k financial, you can utilize Schwab as well. And Schwab is they're much quicker. They typically open the brokerage accounts within 5 to 7 days. It just depends how busy they are. And you can certainly switch from an E-Trade brokerage account over to a Schwab brokerage account. You would go ahead and submit a support ticket on our website, and then we would prepare those Schwab brokerage forms for your signature. And then once you sign them, we can fax them to Schwab for you. So certainly, you can certainly not go down the E-Trade rabbit hole, as I like to call it. Okay, good questions here. So we're almost done with our webinar here. Let's finish talking about today's topic, which is what is the guideline for a self-directed 401k? Give me a moment here. Let me get to those slides here. So the bottom line is that the guideline for a self-directed 401k is not one rule. It's a framework that includes proper eligibility, meaning you need to make sure you qualify to open the solo 401k, aka self-directed 401k. You want to open up a self-directed 401k with true checkbook control, which gives you maximum flexibility under the IRS regulations. It allows you to make IRS compliant investments. You want to make sure you avoid prohibited transactions. You want to make sure that the plan is fully drafted for the maximum flexibility under the regulations and that ongoing annual compliance reporting is performed. And again, here at my solo 401k financial, we assist with the annual compliance, such as Form 1099R and Form 5500 Easy upon your timely request. And that's all covered in our annual fee. We don't charge additional fees for that service. So when structured correctly, a self-directed 401k is one of the most powerful self-directed wealth building retirement plans available for the self-employed or to the self-employed, offering flexibility, control, tax efficiency, and investment freedom, all under one plan. Okay, let's see if we have any other questions here. We sure don't. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable, but we feel that your solo 401k future depends on it. If you haven't yet, please like and subscribe so that we can keep building this great community. We'll be back here again tomorrow with more great content. Until then, have a great rest of the day.